Hey everyone, good evening. It is 9:38 p.m. on Saturday, April 21st, 2018. Hope everybody's doing well. Apologize again for the long time between videos, but I did want to make one tonight regarding the Canadian dollar, just to kind of demonstrate again the combination of fundamentals and patterns, particularly Elliott Wave patterns. So this should be, fairly short, but I did think this was important to show you guys. So we had two big pieces of Canadian dollar news this week. On Wednesday, we had the their interest rate decision, rate statement, monetary policy report, etc., etc. Now, the market was fully expecting them to raise interest rates because the data has been pretty strong as of late for the Canadian dollar. And the Bank of Canada really has been hinting towards raising rates. Of course, they've been saying it's been data dependent, but I think the market pretty much anticipated at least a small hike. And so I think if we had gotten the hike, we probably would have seen a rally, but it probably wouldn't have been all that great because I think it was kind of priced in. However, we did not get the interest rate hike. They decided to keep rates the same, and that really disappointed the market. Now, their monetary policy report and statement were not all that bearish. Pretty much been saying what they've been saying, but the fact of the matter is they did not raise rates, and they kept it at 1.25%. That caused the market to sell off because, again, there was really full anticipation that they were going to raise rates. And then the next piece that came out to kind of bolster what happened on Wednesday was on Friday morning. During the early New York session, we had Canadian dollar CPI, which is a very important figure for really any currency, any central bank, and we had retail sales come out right at the same time at 8:30 on Friday morning. And you can see what was anticipated here. The last report on CPI was a positive 0.6%. They were expecting a bit of a drop off. But it came in worse than that, came in at 0.3, so that really disappointed the market. Again, going along with the fact that they didn't raise interest rates, and then you get some disappointing CPI news because this is a direct inflation relator, CPI, Consumer Price Index. This is a major indication for inflation. So the fact that the market kind of decelerated, that their consumer pricing kind of decelerated a bit and worse than expected was negative for the market. And then we also had core retail sales come out. We're expecting 1.0. The last time was 1% increase. They were expecting 0.4, which again was a pretty big drop off from the last report, but it actually came in at 0. So no improvement at all. So again, a red figure, and that really disappointed the market. And so with that, we'll go and look at the charts. I got a quick break here. I'll be right back. Okay, so I'm back. Okay, so let's go to the charts. I just want to look at two pairs here in regards to this news. All right, so first one we look at is Canadian Swiss. This is the 1 hour chart, and I have two red lines on here because I want to show you where these news events came out. So as you can see, if we zoom out a little bit, here's the 12-hour chart, here's the daily chart. We've been in a pretty strong uptrend. Okay, so respect this uptrend here, but so with that in mind, let's go back down. Here's the 1 hour chart. Here's the top of that uptrend. This candle right here, or this line right here, represents when the news came out, the interest rate news came out. So I'm going to get rid of this now that I showed you that. But it's right here. So, the market had kind of, run out some steam here and kind of started moving sideways. This was probably the end of a trend on the higher time frame, or at least this is the end of wave 3. I still think ultimately the Canadian dollar is going to go up. I would look at this maybe as a 1-2, and this is a big 3. We'll probably have a larger corrective 4, and then we'll go up again. But that's on a longer time frame. But for now, here's where we are. And so here's where the news came out, the interest rate decision. And you can see, the market went straight down on that news. And in typical Canadian dollar fashion here, I want to point something out. And my platform is running really slow loading these updates, so I apologize. But I want to show you the Canadian dollar is just so classic for having a big move and then retracement. So here's where it came out, and then you can see it pulled all the way back up here, and people just take, the scalpers take their initial trade, and we see this pull all the way back up here again and probably chase out some of the shorts thinking it's going to be a reversal, and then the market spikes down again and then it corrects upwards. And so this is down in the 30-minute chart. So this whole thing right here is basically an ABC correction. So we had this move down, and then we had what I would consider, this is an A going up, then we have this B down, and then we have the C up. ABC, okay? I'm going to go back to the 1 hour, and I want to concentrate on this wave C right here, okay? So this candle represents when the CPI news came out on Friday. So I'm going to get rid of this at this vertical line now. So what I saw leading up to the news was this right here, okay? I saw this pattern. All right, I'm watching this and I see this pattern right here, A, B, C, and the news came out right there, and boom, it drops. So down move, ABC pattern. So before the news came out, I took a short right here, right at the top here. And of course, as you saw what happened, the market went straight down and it's continuing to go down. Now, this whole thing could be a giant ABC off of this daily chart, okay? Or the 12-hour or somewhere up here, okay? So I'm thinking this whole thing is an ABC of the correction to the larger up move. So the wave A is about 77 pips. And if this is the C starting right here at that news, it's sitting at 62. I think it maybe will go down another, get down to about this 76.23 area. And if that holds true, if the longer term uptrend is still in effect, then this will turn back up. But I think we got a little bit more down to the downside here. But so what I want to point out again is ABC on the 1 hour chart got in right here, boom, market went down on the negative news. And so that's what we have. But I think so ABC, but I think this whole thing is an A. This is the A, this is the B up, AB, this is the B right here. Okay, it'll probably easier if I draw it. I'll put a different color on here. Let me change the color of this one, just so you can differentiate it a little bit. Okay, so again, this in the blue is an ABC of the larger uptrend from the 12-hour. Okay, so A, B, and then we're going to go down for C, and then we'll probably turn back up again. Now this goldenrod color is the ABC of this down move. So ABC, and then I got in right here and was going down. Okay, so again, the blue is the ABC correction to the larger uptrend that I showed you on the 12-hour chart, that I think is still got a little bit more downside. But this yellow ABC is the correction of just this little move right in here, this down move. And we had this perfect three-way ABC, and now we're down again on the news. Okay, so that's the Canadian Swiss, and I want to show you the same thing on the Canadian yen, which is actually even better, I think. So again, same thing on the 1 hour chart. This is the when the bank rate statement came out. Okay, so I'm going to get rid of this vertical line now that I showed you that right at this candle here. This was Wednesday when that news came out, and you can see we had been going down, and then we had this corrective pattern right here. Okay, market was just kind of overlapping, moving up, kind of chopping around, up, and then the news comes out, bam, and slams right through here and comes back. And then we go back and we retrace. Now this is where your old technical analysis comes into play here. So you have this corrective move and then down, and then we retrace, and now this line used to be support right here. We broke the support. Now you come up and now it acts as resistance from the bottom. Okay, so support here was broken, back up here, now it's resistance. And if we put a Fibonacci on this down move, it retraced right to the 78.6 retracement level. Okay, so again, interest rate news, choppy sideways pattern, breaks down, retraces back up, previous support now becomes resistance, and now we head back down again. And now this is again what I was looking at just before the news came out, was this right here. Let me see if I can go down to the 30-minute chart. This horizontal line represents when the news came out on Friday for CPI. Okay, so I'm going to get rid of that line now. And so again, picture what I saw on Friday before the news came out. Okay, I'm looking at this right here, ABC. This is what I'm looking at. I'm looking at downtrend, rally back to the trend line, down again, and then a perfect ABC pattern up. Okay, I'll label that for you. Okay, there's the ABC back up. I got in right here. I took a short about 5 minutes before the news came out. I jumped in short right here. Market spiked up a tiny bit, take out some stops, and then bam, went right down. Okay, so let me put that back to the normal view, and I'm still in this trade, and you can see it's been going down since then. So again, if you look at this pair on the higher time frame, again, it looks very much like the Canadian Swiss. I'm just going to clear this out here. Okay, we had this large downtrend here. 1, 2, 3, 4, 5. This is a perfect 5-wave trend here. Okay, 1, 2, 3, 4, 5. So we had a perfect pattern here on the daily chart to the downside, and now we're correcting and going back up. Okay, and I still think that this is going to turn and go back up, similar to the Canadian Swiss, but I do think it's got a little bit of downside to go here, because again, the news was negative and the market was very disappointed. So, but again, just keep this in mind. This is what I saw before the news came out. We had a strong impulsive move down, and then we had an ABC pattern up with news coming out, and so to completes that pattern and then down. In fact, I didn't do that before, but let me just see how long these two. So this is the wave A going up. It's about 45 pips. And then off of this, it's not as long. You can tell by looking at it, but let's just see how long it is. It's 35 pips. So this is a pretty short wave C. So it's not perfect in terms of proportion, but just by looking at it, you can just visualize the fact that this is going to go back down. And again, keeping in mind the fundamentals were negative. We had disappointing interest rate news, and then the market was setting up for another disappointment right here, and it did, and it shot right down. We had this initial candle down, the market moved sideways a bit, and then it continued down for the rest of the New York session on Friday. Obviously, it ran out of steam towards the end of the day with the light liquidity at the end of the trading week. So I expect when the market reopens tomorrow night that we probably will retrace back up a little bit, and then we'll have another push down into the London session. So that's what I wanted to show you guys. Again, keep in mind the fundamentals that are coming out, and knowing what the market is expecting. In this case, it was expecting an interest rate increase. The market did not get it. Disappointment, market sold off. 2 days later, we have more very critical information that comes out, especially the CPI number. Again, disappoints. Retail sales also disappoints. So we pretty much have the trifecta between interest rate, CPI, and core retail sales all being negative for the market. And so there you go. The Canadian dollar responded accordingly. I still think the Canadian dollar has some pretty strong underpinnings, so I'm not anticipating these are going to be extended down moves, but you never know. Keep an eye on it. But I am a little cautious based on recent price action on the higher time frames. But I think for now, that's pretty obvious that we're going to see a little bit more, at least a little bit more to the downside. You can see the CCI on the Canadian yen on the 30-minute down compressed right here. Just nice, strong, impulsive down move. And now we're going up, spread apart. This indicates really a corrective move. So again, even though the market was down, the CCI is going up spread apart. I do expect this, again, this will turn up. We'll have a little correction and then head back down again. So I will hold my short positions at least into the session on Monday, and we'll see what happens after that. So, all right, so I hope that was helpful, guys. Again, understanding that intersection of fundamentals and technicals, whether you use Elliott Wave or whether you use regular technical analysis, and using trend lines like I did, like I was showing you before. Right here, this is what I had up before, where we had this, broke through, broke support, up, support now becomes resistance. Good place to get in short again, on a choppy upward move, and then down. Again, impulsive move down, all red candles straight down, then an ABC pattern. This is an Elliott wave correction, and then down again. So really, you got it all right here on this pair, on this Canadian yen. You got classic technical analysis, support and resistance, trend lines, and you got Elliott wave, and you really got it all here. And of course, all driven by the fundamentals. So anyways, guys, that's it. Cut it off here. Have a good night. Good rest of the weekend. Have a good trading week coming up, and hopefully we'll get to do some more videos. Any questions, comments, please leave them below. Like the video, share it. Whatever you can do is appreciated. And if you want more, please let me know that too, and I will try to do some more often. Okay? Thanks, guys. Have a good night.